it's Easter also today. It's Mimuna. The end of Passover was yesterday, and last night started the holiday called Mimuna among the Moroccan people. They really celebrate it pretty much in the night after Passover, mostly, pretty much. But technically, it lasts a day, I guess. There's people who celebrate some part of it during the daytime. Anyway, I wanted to talk to you guys about trading and the time of year that we're in, right? Because there's a lot of misconception about things like months of the year, seasonality, etc., and its impact on trading, if there is any or not, and what impact it has, and is it significant or not significant, and can you correlate it to certain assets or movements or whatever. And the bottom line is, if you at all have been watching my videos ever in the last, I don't know how many years I've been talking about this. When in the videos where I talk about trading, you know that I'm constantly telling you that it's all about the VEPs, right? And that's because it is. It's all about the volatility, the entropy, the probabilities, and the statistics. That is what moves the market. No ifs, ands, or buts about it. And also, I've been telling you that basically you can ignore the news, right? In terms of trading, right? Ignore the news, focus on the charts, focus on the VEPs. That's what matters in your short-term trades, right? Your low time frame trades. Now people want to say, oh, but sentiment matters. Not on low time frame trading, it doesn't. Oh, but if people panic suddenly and start selling, if people panic and start selling, guess where you're going to see it first? You're going to see it on the low time frame charts. Guess where you're going to see it last? In quote unquote the news. Okay, because until people dump their stuff, their bags, there's no dumping to report. So the reporting of it, the retelling, the recarrying, literally to report, to recarry, to carry again the information from the event, then to be carried by the witness to a recarrier, a messenger, a reporter, to bring it to the editor, to bring that, after it's been edited back and forth with the reporter multiple times probably, to bring that to the publisher, and then the publisher has to bring that to the distributor, and the distributor has to bring that to the consumer, or actually to the wholesaler or retailer, and then the consumer has to buy it from the retailer or the wholesaler, and then has to consume it, right? And if there's a wholesaler who only sells to retailers, then the retailer has to buy from the wholesaler, and then so there's an extra step there. So we're talking 5, 6, 7 different levels of information being passed around by the time you get the quote unquote news. So by the time you see it in the news, it's already old news, and already new stuff has happened and is happening that you're not even aware of because you read the news as your source of information. Okay, now that's not to say that you should never look at the news. No, you can look at the news, either to be entertained or to be misinformed or misled, or right, and to be able to decipher the wheat from the chaff, the noise from the signal. Because there's a lot of signal, there's a lot more noise. There's a lot of wheat, but there's a whole heck of a lot more chaff, right? That is to say, if you don't watch the news or read the news or know anything about the news, you're underinformed. But if you do consume the news, then you're misinformed, which is why you need a wide variety of news to have any kind of a basis from which to decipher the wheat and the chaff, or the signal and the noise. Well, in trading, you don't have that luxury of time when you're trading low time frames. And again, you could not get news fast enough because it cannot be created fast enough for you to trade on a 1 minute time frame. Even if to you can say, well, anybody can blast out a tweet and that can make noise. Elon Musk can say something on Twitter and that can affect the market. No, Elon Musk cannot blast out a tweet and that's what affects the market. No. Here's an example. If Elon Musk sends out a tweet that says Bitcoin is great or whatever stupid thing he says, and then people see that tweet and they rush out and they buy Bitcoin, okay? Where do you think you're going to see that information first, that it's people buying it? Remember, bots control 80% to 90% of all trades on all assets, on all time frames, on all markets. 24/7, 365. They don't take holidays. Yes, there's less trading even by the bots during holidays because you have about 10 to 20%, sometimes 25%, but not usually more than 20% of the traders are done by retail traders. So there's less easy liquidity for the bots to grab during sleepy holidays. Like today, for example, relatively, it's been a sleepy holiday since Thursday after the traditional markets closed. Right, it's been a relatively sleepy holiday because you got Good Friday, then the Saturday before Easter, end of Passover, the moon and all that, Passover and now Easter, right? So it's been a relatively quiet holiday for crypto traders, but it's still been very tradable on low time frames. Okay, so let's say he went out and said, on Friday night, when like the whole market was basically asleep, and he said, "Hey, buy Dogecoin," or what? People would have rushed to buy Dogecoin. Okay, and they would have seen, oh, hang on, the price isn't moving that much, right? Because nobody, like retailers aren't around, and the bots aren't super active trading something that nobody really cares about when no one's around to make the difference. Because that 10 or 20%, yes, it's not the majority of the trades, but it's the easy liquidity that the bots go after, that they target, right? That's the money, right? The retail money is the money that sort of that's the grist, if you will. That's the grist, 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 right? Or if you will, that's the grease that keeps the wheel churning or turning, right? That's the grease that keeps the wheels in motion. It's that liquidity from the retail traders which keeps the markets essentially moving. Why? Because that 10 to 20% of easy money, so to speak, is relatively easy for the machines to get from retail traders. As opposed to when the bots are fighting each other, they're fighting other entities that have also very significant bags. So they have to take, in a sense, a bigger risk if they want to beat out those other bots, right? And they're always fighting those other bots. It's not like they don't. But the real quote-unquote grist of the mill is actually the money that the retail traders provide, which is that convenient 10 to 20% of the money in the market at all times. And so what does that have to do with April, May, seasons, whatever, Q2, annual patterns? Well, there are no patterns to trade. Okay? Don't trade patterns. Trade maths, trade VEPs. That's what you need to trade. People looking for patterns. Oh, Q2 is historically going to be higher by 20%. Yeah, how's your Q2 going so far? Okay, we're now already, almost a few weeks into Q2. Right, it's the 20th of April already. We're already now 20 days into Q2. Bitcoin and the crypto market and traditional markets are not up significantly so far this quarter. And people telling you, oh, Bitcoin is traditionally up 20% in Q2. Well, maybe it will be. Maybe it won't be. If you're looking at trading low time frames based on the rumors and speculations of analysts talking about high time frames, you're really missing the point. When you're a low time frame trader, every day is different, and every day you look at the low time frames. And you look at the monthly, but you look at the weekly just to see what's going on in terms of what's the weekly direction generally doing. You look at the daily, you look at the 4 hour, the 90 minute, and so on. 45 minute, 33, 30 minute, 15 minute, and so on down the line until you get to the 1 minute, And maybe you look below there too, if you trade below there. Why do you do that? Well, because you trade in low time frames. If you want multiple occurrences of opportunity in a given day, you're not just going to trade daily time frames, where you're not going to have that many days to trade in a given week, month, season, quarter, year, right? You want to look for multiple occurrences of opportunity to trade any given asset, and you do that by creating lower time frames, like 15-minute and under, right? Intraday trading. Now, does that mean you can't trade higher time frames? No, of course you can trade higher time frames. Absolutely, you can. Obviously, right? Does it mean you shouldn't trade higher time frames? It depends on your trading strategy, in the sense of, I wouldn't even call it a strategy, but your trading goals, really. Do you want to run multiple trades in a day? Do you not have the time to run multiple trades in a day? Are you stuck at your job, which is not a trader? 8, 10, 12 more hours a day? What are you doing with your time when you're not trading? How much of your day are you not trading? Figure that out, and that should easily help you determine whether or not you should be, trading very low time frames or not. And I mean, from my point of view, to be honest, the busier I am at work, the lower the time frames that I'm going to trade. Yeah, I know it's counterintuitive. Most people think, oh, I just want to enter one trade, do my work, come back at the end of the day, and then see what the trade's doing. Well, that's one way to do it, but you could be down significantly if you let your trade go all day and you don't look at it. My point in my book, you don't enter a trade and not look at it. Certainly not when you're trading low time frames. No way. Why? Well, because assets that are volatile can move very quickly in one direction or another. And they do. And you can expect an asset to be going up and all of a sudden it goes down. Right? Or vice versa. Right? And if you walk away from a volatile asset for however many hours in a day with a trade on the table and you come back, there's a high probability it will not be in the exact same place, even on a sleepy day. Okay. Now there's also probabilities it will be relatively, because it might zigzag back and forth, and it might end up where you left it. But generally speaking, especially if you're during a working day, then like a traditional working day, right? Then typically the asset will not be in the same place that it was when you left it earlier in the day. And so again, people who are trying to trade based on the time of the year, good luck. It's not going to work out well for you, probably. You think it will. Maybe you'll be lucky this year. Maybe you'll be lucky next year. Maybe you're the lucky one that's always lucky. But traditionally speaking, statistically speaking, right, if you're relying on patterns, historical, right, cyclical, kind of annual types of patterns, then you're going to get a big disappointment for a very simple reason, right? And that very simple reason is that, like I told you before, patterns break, maths don't. Right? Patterns break, maths don't. So that goes for seasonal stuff too. So if you're thinking, oh, April showers bring May flowers, meaning buy in April and May and then go away, you could be very disappointed by that. Because for all you know, we could have a very down trajectory: April, May, even June, July, August. You don't know. Is it possible to prognosticate very realistic targets to the upside and the downside in the high time frames, like the monthly or whatever, out into the future? Yes, absolutely. We do that all the time, right? And the prognostications are very accurate. But to try to trade that is highly risky, right? Why? Because it could go wrong. Because when you have a very long time frame, like weeks or months or even days, right? There's a lot of time on any given day. There's 1,440 minutes. A lot can happen in 1,440 minutes. A lot, and a lot does happen, even on relatively slow days. So, by the way, guys, if you want to learn how to trade the VEPs, if you don't know how to trade the VEPs and you want to know how to trade the VEPs, how to read the VEPs information, and how to take the necessary action, Alpha Trading is having a sale right now through Easter, which is today. It started, I think, on Friday. It's going all the way through today. So today is your opportunity, your last opportunity for this sale. So if you want to take advantage of the sale, get a massive discount on the trading indicators package, the Pro Traders subscription packages, or if you want to take advantage of the private tutoring package, which includes private tutoring for a bunch of sessions and a bunch of more features and benefits, includes a whole course load of information. And no, it's not just a pre-packaged video thing that you have to watch. It's actual private tutoring, one-on-one sessions, and you get access to the Pro Tools for a whole year. So that's a massively valuable deal, right? That is also available right now on sale. And you can just go to the Alpha Trading Discord, which is at alphatradinghq.com/discord. Again, that is alphatradinghq.com/discord. And if you go there, you will see the Shop Alpha channel. If you go in the Shop Alpha channel, you'll see all the details about all the sales. And any order that is placed today will be honored with the sale price, even if for some reason it takes you some extra hours or whatever to actually get the payment through, because sometimes credit cards do weird things, especially on holidays. Who knows what? We know that happens. So, if you put in your order today, and you have to pay later, like tomorrow or whatever, or even the next day, because of credit card issues or whatever, or I mean not credit card, no, I guess it could be credit card issues, but whatever. Because of any issues, as long as your order is in today, we'll honor that order, for a reasonable period of time. And you can get the payment in today or tomorrow or maybe the next day, who knows. And that'll do it. Anyway, see you guys. Have a great day and happy trading. Peace. Oh, yeah. Oh, and also happy holidays, happy Easter, happy all that stuff. Cheers.